guys. We are recording. Blood is in the streets. Here with Omid Malekan. Omid, welcome back to the show. Columbia University, Columbia Business School, correct?
Yeah.
Author, Bitcoin and crypto powerhouse poster, I believe, on Twitter. Very much recommend all of his posts. If you don't follow Omid, please do. Very strong posts, macro about the industry in general. Really always enjoy his takes. So yeah, blood in the streets this morning, Omid. Is it the tariffs? Is it the Trump coin? What do you think?
First, thanks for having me back on. I really enjoyed the last conversation and our off-the-record conversation since. It seems it's kind of normal in crypto bull markets that some kind of macro event just sends things reeling, at least since 2020. That's when, with start of COVID and Black Thursday, people started treating everything in crypto like it's just another risk-on asset, which frankly has always annoyed me because I feel like that's bound to be a temporary narrative, as is the idea that everything in crypto is the same asset, basically. But yeah, seems like there was weakness Friday in crypto, and then it really got going over the weekend. So the one thing I would say is that once again, the sell-off actually demonstrated that crypto is the most efficient market in the world because it prices macro news in faster than everything else, partly because it's the only thing open on the weekend, but also just because to me it's more of a pure market and it just goes to whatever extreme the news will eventually dictate right away. But the other thing that stood out to me, and I'm curious what you guys think, is I actually think Bitcoin has behaved exceptionally well in the past few days. And like if you look at it now and say, oh man, big global macro event, risk off, etc. Bitcoin's at 95,000 or 94,000. It's like that. it's less than 20% off of its all-time high. Still more than maybe double what it was a year ago. So I do wonder if Bitcoin has sort of graduated to being more of an institutional asset as opposed to everything else in crypto, which is primarily a retail phenomenon. And the evidence would, of course, be we have the ETFs. You assume that people and the institutions who are buying those are less hot money than people trading on crypto exchanges and whatnot. You have some level of, I don't want to know if I want to say sovereign buying, but there are enough rumors of governments. Some of them are not rumors. Like we know that the Central Bank of Czechoslovakia is considering buying Bitcoin. And I imagine the speculation about a strategic reserve in the US has inspired other major institutions, whether they're central banks, sovereign wealth funds, large corporations, to consider doing the same. And maybe some of them have already started doing so, which would imply that Bitcoin now has a sort of buy the dip cushion underneath it.
Yeah, well, as we've seen in past bull markets, right? Like really sharp sell-offs usually get caught with the buyers that have been waiting for them, right? And it's almost like an indication that you're in a bull market rather than an end of a bull market. So to get into the game theory really of like nation states and Bitcoin, I think as soon as Trump started talking about, or even before he started talking about, as soon as like the whole, red pill element, orange pill element of the mostly Republican leadership in Congress started talking about a strategic Bitcoin reserve, every other country had to at least start thinking about it, right? Didn't mean they all needed to take a seat at the table, but as soon as there was a conversation here, everyone else had to have that conversation. And I think then as soon as Trump started talking about it and then he gets elected, I'd be really surprised if there weren't many more countries than are talking about it, are out there figuring out, can they have some kind of position? Can they start buying slowly? before the U.S. sits down at the table. And I personally think that the U.S. sitting down at the table is just going to be saying we're not going to sell off any of the coins that we currently have, which are the seized ones. And I think that's like 190,000 coins or so. It's a lot. So just that, but I don't know if that impacts the market. Saying we're not going to buy anything, we're just not going to sell. I'm not sure that impacts the market.
Yeah, I don't know short term how much was priced in terms of people actually expecting Trump to come out like his first week in office and say, "Oh, and we're going to buy this many Bitcoins now and put it in a reserve." I actually don't want the U.S. to do that. I think it's bad for America and bad for Bitcoin and crypto in general, because as soon as governments, especially one as large as the United States, start owning it, they're going to have opinions on how it should operate and evolve. And it doesn't make sense for the issuer of the global reserve currency to have a strategic reserve of what I consider like purely a monetary asset, as opposed to other things in crypto that you could say like, oh, well, there's utility here, so we should have a reserve in the same way that we have an oil reserve. But other governments, and I think we might have talked about this the last time I was on the show, they certainly have an incentive to accumulate Bitcoin as an insurance policy against some kind of a breakdown in the global monetary order, which things like tariffs certainly would accelerate. And if any smart finance person was advising some government, if they say, well, we want to accumulate $1 billion position in Bitcoin, what they would tell them is, well, first, don't tell anybody. 2, figure out how patient you are, how long you want to take, and then just do some kind of a very slow behind the scenes VWAP type of acquisition. And then you can be ready. There's inevitably going to be a sell off at some point. We don't know from what price. It could be from even higher than it is today, but then you'll be able to buy a chunk without forcing the market to run away from you. So this is, I think, it's all speculation, but I would not be surprised if that's exactly what's happened now and last night, and that some of those potential buyers actually stepped into the market, which would explain why Bitcoin is hanging in there compared to all the alts.
To your point, though, on the U.S. having a strategic Bitcoin reserve being bad for Bitcoin, because I guess you're saying like that would require the federal government to have an opinion on Bitcoin. Is that where you're going with that?
That's a part of it. I mean, the easiest thing would be if you have a pro-crypto government accumulates, then if we end up pendulum swings, we get an anti-crypto government, now we have to worry about them dumping on the market. That's not something I want to have to think about. Because in the US, it would really, having a strategic Bitcoin reserve would really be more of a political, I don't want to use the term stunt. What's a nicer way of saying it? It would be a political signal that we believe in this thing. It's not something America actually needs. Whereas if you are one of 100 countries in the world that uses dollars for a lot of different things and has concerns about shifting geopolitical narratives or trade wars, forcing you to have to pick against America, and then suddenly potentially having issues with sanctions or other kinds of dollar restrictions, then it makes sense for you to have a strategic Bitcoin reserve. And then the second thing, which, I mean, thankfully, because Bitcoin is so decentralized and it's proof of work, it's not as big of a concern. But if the US government suddenly holds tens or $100 billion worth of Bitcoin, and say there's a discussion about a potential fork, or suddenly you get a feisty OFAC that says, well, now that we're a major Bitcoin investor, we're going to start having opinions about what kind of transactions American miners should process and which they shouldn't. So that wouldn't be good. It would be a much bigger issue for proof of stake coins, because I think, even though I just said strategically, if you say like the world is going to move on chain and all of Wall Street is going to be disrupted by tokenization, yada, 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 then you say, well, America should have a strategic reserve of the gas token of whatever network this is going to happen on, for the same reason we have oil reserve. But then the downside of that is then it's like, okay, well, America now has a lot of ETH. Well, they should stake it. Why wouldn't they? America should be earning a yield on its ETH. And now, because in proof of stake, the validators are much closer to being governance than in proof of work. It's like, oh boy, is America going to signal for the debated gas limit increase in Ethereum right now? Is America, if they buy a bunch of Sol and stake it, or they're going to have an opinion on changes to how consensus is run, or like the proposal to change the inflation schedule? I don't think we want a government getting involved in all that.
So, but to take the other side of this, first of all, I think the government already has an opinion on Bitcoin. So, and they'll continue to have an opinion, and they'll enforce that through policy and regulation. So, if the government is a participant in that ecosystem, I would think that might make its opinion more informed, or at least maybe more aligned with the ecosystem itself, potentially, right? I actually see your point on this too, but the other side of this is also, so is it an inevitable part of the maturity of Bitcoin that you would have governments getting involved, right? It gets to a point where, like, could it continue to mature and get to, sailor levels of market integration without governments having any participation at all? Like, I think it might have happened at some point for sure. And I don't know. I see it as potentially just like a check mark along the path.
I think that's a fair counterpoint. And I do think eventually Bitcoin will be much more of a sovereign asset than an individual asset.
For reference, from our friend Rodolfo at Bitcoin Treasuries, we have 3 million Bitcoin that they're counting up in treasuries, and 1.3 million are in the ETFs and funds. Private and public companies about 1 million. Government's 500,000 Bitcoin.
Interesting.
So, but it's it's been a constant clip of governments, some growth over the last year.
What do you mean in treasuries?
Yeah. Like on a balance sheet of a
like corporate, like Sailor.
Of either a company or like Sailor, he's in the public company stack. He has the majority of that. Sailor has like nearly 500,000 now, 470,000, and the public company grouping is 618,000. So it's an interesting breakdown right there. But yeah, I mean, governments are an interesting minority there, and it will be, be interesting to see how much that grows. I don't have necessarily a firm opinion, but I do think that the risk is always just like you said, Omid. I mean, you don't want them mandating a fork or not letting users have access to forked coins or whatever it might be, and that certainly would be, it's in the cards. For the more that you talk about strategic reserve, the more you talk about fiat getting involved, it's in the cards. But I don't know, it seems like Bitcoiners want it too, oddly. What did you guys think about the Bitcoin on not just in a strategic reserve, but we have Bitcoin now in the Lightning Network. Those guys over at Lightning Labs been working hard, and I guess Tether is going to be able to be fully operable on the Lightning Network now.
Is that right? Tether's back, huh? After starting on Bitcoin, abandoning Bitcoin, now they're coming back to Bitcoin.
Coming back on it. And I always think it's interesting because, you have to go between the purists, the hardcore maxis, and then, like, I don't know, the non-purists. But usually they appreciate these dollar-based adoptions. I think primarily for NGU, as they say, number go up. But of course, there's always risk there.
So sorry, go ahead.
Well, I was going to say, do you guys see that? And I don't really know what happened in this story, but the whole Bukele, El Salvador, was taking a step back from having Bitcoin as legal tender. I think that happened over the weekend, or at least I saw the story over the weekend.
Summarize it, please, for us.
I thought I just did.
I didn't see it.
No, I mean, so like the story was something about like the IMF was like strong arming him and reference some loans that the country had, and so he basically comes out and says, well, the legal tender portion of our Bitcoin experiment hasn't really succeeded anyway, so we're going to abandon that to just like dollarization. But again, like that sounded very much divergent from like everything we've seen from Bukele for 3 years. So I wasn't sure if you guys had seen the story.
It does, yeah. I mean, the IMF story is not divergent. They've been
Right.
strong arming them from the beginning. I've not been a fan of it from the beginning. What leverage they have, I haven't looked into it, but
Well, they
it's
have
not a
less
huge.
now because the price of Bitcoin has doubled for Bukele.
Right, right. 600, $600 million worth. They have 6,000 Bitcoin.
So I actually think this is perfectly as expected, because I never thought the legal tender aspect of Bitcoin adoption, or even the idea that it would suddenly become a major player in remittances for El Salvador, I never agreed with that. Only because if you're talking about a very, very poor country that is rural in many parts, the infrastructure is not great. And suddenly we think that all the people in that country are going to fully embrace this very novel form of money that is very difficult to use. And it's not really purpose built for somebody wanting to send $100 from the US to El Salvador. All of that to me just struck me as like the maxi fantasy of people who don't understand what the lives of normal people is like. And the Chivo wallet rollout was a disaster. Again, not surprising, because it's really hard to do this kind of thing. And Lightning has always had serious issues that I thought were more or less deal breakers for individual usage. Might be interesting for more like building clearinghouses against custodial service providers, which is basically what it's become. And what I thought was interesting about what Bukele was doing was having a strategic Bitcoin reserve, because they were potentially achieving two things. One, having some of the country's wealth in an asset that could appreciate materially. That's normally not the case for anything that a country has as part of its foreign exchange reserves, for a couple of reasons. One, something that could appreciate materially could depreciate materially, and actually El Salvador had to deal with that because they bought in the last bull market and had to live through the bear. But the other problem is that if you say that, well, I want to not just hold a basket of currencies, or which usually means like you're holding the sovereign debt of the countries that issue those currencies. Say, well, we want to own equities, and other kinds of risky investments. Now you're really tangled up in softer property rights, because you can imagine a situation where if like an El Salvador said, we're going to buy a bunch of shares of Nvidia, that is not optimal, because whatever the legal protections that they have, if they're holding US treasuries, they're not nearly as strong. And the appeal of holding Bitcoin in that situation, is that the property rights, I think we would all agree, is actually the strongest, because of the censorship resistance, because Bitcoin it's outside money, it's not inside money. It's not a promise from somebody who could renege on it if you don't do what they tell you to do. But then it's a far superior payment instrument at the national level than something like gold is. So I actually I think maybe they were naive. I don't know how much Bukele actually thought that like the wallet would take off and that people in El Salvador would be paying for stuff in Bitcoin. Maybe he thought that was going to happen. Maybe he didn't. But to me, the point of the whole thing, even if the way they designed the legal tender law was that nobody actually had to accept Bitcoin in El Salvador. Instead, what the government did was set up almost like a national fund that if somebody went to Walmart or the equivalent in El Salvador and said, I want to buy with Bitcoin, you could then just go to the government instantly and convert it to dollars. And when I learned about that design choice, I thought, I wonder if that's yet another means that the government wants to accumulate Bitcoin. Because now the government's playing the role of a liquidity provider or a market maker, and you could structure that to say, like, yeah, we're going to be constantly buying Bitcoins from businesses that don't want to hold it and selling dollars.
It's probably why the IMF is mad at him. What do you think about?
Sorry,
No,
the IMF just put out this paper on tokenization. It's a quick segue. This is why I get irritated with these kinds of institutions. And like, the world is finally coming around to tokenization, in part because the existing financial infrastructure for things like securities is just so shitty. But they did this thing in this paper that a lot of these institutions, even the Wall Street firms, do that drives me crazy. They're like, there's three kinds of tokenization. They have a very loose definition, like a token is some container that's programmable on some shared infrastructure. And they're like, one way you could do tokenization is on a public permissionless blockchain, or what they call DLT, DLT is a trigger term for me because it's a completely made up thing. Like nobody in our industry ever uses the term distributed ledger technology, including the people like, Scott Stornetta, who literally invented blockchain, would never say it's DLT. And I tell people, like, the people who built this stuff and use this stuff, they call it a blockchain or a chain or something. And then you meet some like, World Economic Forum type that is some like
consultant from Ernst & Young.
Anyway, but the IMF says there's public permissionless tokenization. Fine, that's there. It's huge. It's adopted with things like stablecoins. Then they give you but you could have a permissioned blockchain, and then they cite the vaporware that is things like JP Morgan's, I forget what they call it now. It used to be called Onyx. And then they say, and there's a third category where just shared financial infrastructure could have tokenization. And I'm like, well, we already have clearinghouses. Like we already have SWIFT. We already have the DTCC. And if you want to say that is a really, really, really shitty form of tokenization, fine. One of their definition items says, then the shared infrastructure could be made to be like, instant and multi-asset and programmable. And I'm like, yeah, please call me when a clearinghouse actually implements something like that. Like this fantasy that they have that there's a new idea and the existing infrastructure that only exists because of the lack of the idea could then also adopt the idea is very comical to me.
So where's the nexus there? How do you think that looks? I mean, that's a long time thesis, right? Scott Stornetta did that when did him and Haber write their papers? That was the early 90s, right?
90s, 93, I think, or something like that. Yeah.
So here we are.
Well, the point
2025.
The point that these institutions, if you actually have a conversations with them, even they are forced to concede. And I have a paper coming out on DeFi with one of the two ECB researchers who loves to talk about how Bitcoin has no utility. But he does actually believe in decentralized finance on public permissionless blockchains. And he's very smart about it. But he always talks about how the business model of all the intermediaries in the existing financial system is fully dependent on the structural flaws. The fact that it's not real time, the fact that it's not programmable, the fact that every currency and every asset has its own kind of infrastructure. So when really smart people, whether they're Ernst & Young consultants or IMF researchers, come in and say, oh, well, we can have the stock market or the foreign exchange market move to 24/7 real-time execution. I'm like, you can. And then the people who own that infrastructure would no longer earn a profit. Good luck with that. There's so many fun anecdotes of how this would be. Like, I just had my first week of class, and I do a demo in the first lecture where I try to demonstrate what it takes to open a bank account and send a wire, and then I demonstrate what it takes to open a crypto wallet and send somebody a stable coin. And I always ask, like, which of the students have sent a wire recently? I have a lot of international students, so it's sort of a easy bait. And one of them said, "Oh, it took 4 days and yada yada yada." I said, "Well, who gets the interest on your money during the 4-day period that it took that wire to settle?" And it's not you, and it's not whoever you sent the money to, but somebody gets it. So now convince those institutions to move to real-time payments, like you would get with programmable, tokenized DLT or shared infrastructure. It's just they have no incentive to do that.
Yeah, and it's interesting that bring it back to the Tether story. Like they're doing well. They are making waves. I saw that they made 13 billion last year, and I mean that they are like the chain itself's 150 billion in market cap, right? They said that that's comparable to a Goldman Sachs level profit.
I think it's higher currently.
Yeah, well, it's 13, 14 billion. I can't remember, but I just saw it on an article. But I'm just looking at TradingView. Goldman Sachs' enterprise value is 700 billion. But that's probably even asset values probably in trillions. But yeah, $1.5 trillion balance sheet. So it is a much more efficient way to make money if you can get in the game. Tether and the people behind it, they've had to skirt a lot of laws to do it, but now that they have it, now that we have a quote crypto friendly White House, we should see tailwinds for the industry. No?
Oh yeah, and did you see, by the way, that people posted Tether's income per employee? That it's probably the most profitable company in the history of the world per employee.
But it was like by like an order of magnitude,
right?
Because it was something like
200
million per employee or something.
Yeah, that's unbelievable.
And that probably exaggerates. It's probably even higher than that, because I imagine that most of their employees are not involved in the stablecoin business. So I think the interesting thing about Tether is that market forces will eventually drive their income way down, because if we do have pro crypto US government stablecoin regulations or even legislation, there's going to be a flood of this stuff that hits the market. And this is part of the beauty of tokenizing on permissionless DLT, aka a real blockchain, which is that competition flourishes. Anybody can issue a stable. We could issue a stable coin if we wanted to tomorrow. And it's going to be so cutthroat that I expect almost if not all of the float will be given away. And Tether's competitors already do this. Circle already has a significant rev share agreement with Coinbase and maybe others. It's possible Tether also has deals like that with certain crypto exchanges. We don't know, but the rap has usually been that they're very stingy and they don't want to pay. But there's a whole new generation of stablecoins that are the yield-bearing ones. And you can even put the tokenized money market funds like BlackRock's in that category. And I anticipate soon enough, we're going to see large institutions, maybe even like tech firms, social media firms, issue stablecoins as a loss leader, meaning they will give away 100% of the float in order to get you to do something else, right? Like I fully expect Facebook Meta will eventually come back, will eventually do Libra or something like it, or partner with a stablecoin issuer, but they don't need to make money from, like Tether does, from the float on the reserve. They could say, we'll pay you 4% interest, use our stablecoin, but then integrate it into their platforms in a way that lets them save money on credit card fees, for example. And then the interesting question is, what does Tether do in that world?
Well, it would still be useful for all that capital flight from China. So it always has that use case.
Yes. Yeah, this is going to take many years to play out, but you know how they keep buying random businesses now? They've bought farmland in South America. They have bought, I think they have a crypto mining operation now, or they do something with mining, don't they?
Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe.
But they're diversifying. Now, part of it is they have so many. You're making $10 billion a year. You got to do something. But they're very, very smart people there. And I imagine that they see sort of the writing on the wall that this is probably their peak profitability. I imagine actually the use cases like escaping Chinese capital controls will be more and more of a minority. Because if you get into things like actual like cross-border B2B payments or settling capital market activity in a stable coin, or just people that just want dollars but want to earn interest on those dollars too, because who wouldn't? I imagine the total addressable market of all of that is far, far, far bigger than the gray economy stuff that Tether is used for.
So segueing into the executive order, or Trump's executive order on digital assets and the ban on CBDCs. So I guess what probably plays out from this is a flourishing of private market stablecoins, and the possibility that some other nation state sees an advantage here and says, well, if they're not going to issue CBDCs, if you were more of a surveillance oriented, not that the US doesn't have its challenges there, but if you were a more surveillance oriented nation state, and you see that the US is not going to pursue CBDCs, at least not under this administration, or probably not under any Republican administration for the near term, there's a little bit of a vacuum in that space there. So I don't know. What did you think? And we could talk about the EO in general, but as a segue out of stables and into CBDCs, what do you think?
I understand why it's become a political lightning rod, particularly among conservatives. I don't know if you talked about this last time, but I had an epiphany moment last year where I was driving in my car here in New York, and I was listening to sports talk radio, and there was an ad that starts by literally going, "Did you know that governments are planning to issue a digital currency and that it will be used to control and monitor all of your activity?" And I'm in the car. I'm like, "What the?" And then I'm literally like, "What station?" I'm like, "No, it's WFAN." And then it keeps going about like all the evils of CBDs. And the whole time I'm like, what is this a commercial for? Because it even says like, what I'm describing is a central bank digital currency, and it's coming to a country near you. And then finally it's like, and that's why you should buy gold. Go to bobsgoldbars.com, yada, yada, yada. But I was like, wow, this has really gone mainstream in a very negative way, that people really fear this. But particularly in the US, I never thought there was any risk of it. The Fed wants to have nothing to do with it, partly because the Fed views its mandate to protect the too big to fail banks. And the CBDC would totally blow up commercial banking.
Yeah.
And that would be sorry, go ahead.
No, just what you were saying before about, legacy TradFi talking to your Ernst & Young DLT consultant or the IMF. I mean, that it's on on steroids, that thing, when you talk about actually the CBDC versus deposit taking banking. I mean, that's the whole bread and butter of what they do. And if the central bank is going to move, like the central bank simply won't move clients away from the banks are their shareholders. So there's just no way
Great point.
that Europe is weird about it. They always try to do all this, weird Orwellian stuff, and they're saying like, well, we're going to explore it. We might have max token values of this digital euro that you can hold on your wallet, because they don't want people loading up their digital wallets with it. They just want it for like spending. But then they're like, the same thing, like, why are we taking fees away from our legacy partners anyway? And then on top of it, you take away the fractional reserve banking loan deposit taking function, which is huge in itself.
Yeah, and Europe is so going. Let's go down the list, right? The U.S. I think we all agree is not going to do this anytime soon, even if Trump wasn't president. It really is like the nuclear option, that it completely rewires your economy in all sorts of unpredictable ways, and also just technologically, it's very difficult to implement. So, okay, if the U.S. is not going to do it, then Europe and the ECB initially was very gun ho on doing a digital euro, in part because they really want to get rid of American payment companies like Visa and MasterCard that have a lot of power in the Eurozone. And they really freaked out when Facebook and friends announced Libra, because they were like, great, we already have American credit card companies control domestic payments to a certain extent, and now we're going to have American tech companies. But the thing with CBDCs is that every time you go down the path of we want to do it for reason ABC, what happens is you loop around to a contradiction and you realize that you're going to achieve the opposite. So in their case, they realize what you just described, Matt, that like, oh wait, this would be very bad for the commercial banking sector. And Europe is far more dependent on commercial banking for credit creation than the US. In the US, I think it's like 20% and falling how much of our total credit comes from banks. In Europe, I think it's over 50%.
Yeah, it's much more centralized. Yeah,
right
around the banking system.
Yeah, and European banks are much more dependent on deposits as a source of funding than American banks. So they quickly like, oh, we can't do that. Oh, but what we'll do is we will, like you just mentioned, put a limit. Like an individual could only put 1,000 euros on their wallet. The problem with that, and here comes the contradiction, one of the primary motivations for doing a CBDC is to preserve the role of cash and to bank the unbanked. But if you have to go through the bank-like KYC, because that's the only way they would know that this is your wallet and you're not allowed to have more than 1,000 euros. So then now their focus is all on a wholesale CBDC, which is like, again, whatever. If you want to upgrade Target 2 payments, go ahead. You don't need to call it a digital currency. So then who's left is the question, I guess, going back to your point, Alec. Like, what's a country that's prominent enough that if they issued a CBDC, people would view it as a potential competitor to like a privately issued dollar stablecoin and wouldn't worry about what this would do to their own domestic banking system? So it's not US, it's not EU, probably not.
I could see BRICS.
But who wants to hold like a digital ruble where your counterparty is Putin's Russia?
I agree with that, but I could see that as, I think BRICS has a goal of at least being a thorn in the side of the dollar initially, and over time, hopefully growing and adding enough to be a competitor economic bloc and maybe issuer of currency, or maybe it's just the yuan, right? I don't know, but that I don't see that as like near term, but that's probably the area where I could see and I guess it's a fair point, right? Because that's not who's the central bank in BRICS that's issuing the currency. They don't have a central bank.
Yeah, I mean, they could set up their own like Eurozone type thing, but again, it's like outside of those countries. The main reason you get a currency, there's a couple of reasons why some currency usually becomes the global reserve currency. One is every country does not want to take every trading partner's counterparty risk. So if you're trading with 5-10 neighbors, you don't want to get paid in the currencies of 5-10 neighbors, because you're like, I don't trust all these people. They might inflate. They might just literally like censor me. So that's one. And then two is the liquidity thing, which is like, well, if I'm going to have 5, 10 different trading currencies, they're all going to have fragmented liquidity. So it just becomes de facto, let's all agree to use one currency that is very liquid. And importantly, we really trust the government that issues it. We trust the legal system of that government, because it means that if you're dealing in dollars, you go through the US court system if you want to sue someone or if you have an issue. If you're dealing with euros, you go through the EU and so on. And then you want to trust the political system of that government. So this country's pretty stable, right? It's sort of like when we talk about in crypto censorship resistance and credible neutrality, and some level of decentralization. That's what you want in the issuer of your global reserve currency. So the problem with the BRICS is they could set up some kind of a multinational institution that issues some kind of a basket currency backed by all of them. But it's like, how many other countries in the world are like, oh yeah, I really trust the political systems and the legal systems of Brazil and Russia and India? Very, very few. And so this is why with the CBDC thing, I'm just like, it's not going to happen, because you go down the list, right? You mentioned China. China has been piloting their digital yuan for years. It actually hasn't even taken off that much domestically. But one, China has very strong capital controls. So nobody wants the currency of a country with strong capital controls as their reserve currency, because it's censored by definition. Two, how much do you trust the political system in China, particularly with Xi Jinping having installed himself as dictator for life, and he's terrorizing his own domestic companies? So like, what's he going to do to your companies? So the funny thing is, when I have this thought process and I keep going down the list, it's like, yeah, some countries might issue a CBDC for some domestic or whatever reason. No one's going to care. But the scenario that you both actually described is very important, that people want to diversify from the dollar. The US legal and political system is, we're increasingly censoring via sanctions, and we just had massive tariffs announced. So our political system is externally viewed as destabilizing. The only thing that's left is Bitcoin. If you want to hedge against all of this, I don't see it, some other country suddenly rising to the level of trust and stability that America has enjoyed in the last, post-Brexit, post-Bretton Woods era. But I could see Bitcoin playing a major role in all that.
Do you know what the average life of a currency is? You guys?
No.
It's 37 years.
That's a fascinating statistic. Still more than the average life of a meme coin on pump.fun.
We don't know that yet. I'd say there's not enough data on that.
Right.
And we haven't even talked about Trump. But Trump coin.
Oh.
But Matt, you were going to say something, I think.
No, just the coda to that. I completely agree with the conclusion, because I was looking at this for a while with the Human Rights Foundation. Like, we were really cautioning about the CBDC adoption. And my one concern was the Nordics, Sweden and Norway, because they always try to do these sort of brain dead, philosophical sort of, we're rich enough to try this and everybody should have access to cash sort of thing. Everybody deserves it, this and that. And again, don't take me wrong, dear listener, everybody does deserve it, but you can easily get that with Bitcoin. But they had been working really hard on it. And I just Googled again to see the latest, and Norway just said, as of November, their committee said that they can wait. They can wait on adopting a CBDC, the committee that was going to recommend it to the finance minister. So that was surprising to me. I thought they were going to do it, because I had a lot of Norwegians tell me they were going to try to do it. But, those are the only countries that I was thinking could maybe try it. The ones that are rich enough, the ones that don't really need it anyway. Sweden and Norway have always been on this drive to go cashless, like just credit card cashless away from there. But I completely agree with your conclusion. I think that's true. So we're on the path to Bitcoin. It certainly seems that way, but I don't know. It's going to be bumpy. I'm actually surprised these markets today. Who knows how short term this is? I mean, Trump could fart by the end of the week, and Bitcoin could go back to all-time highs. I have no idea, but it's really strange to see this sort of autocracy coming back in the world, and there's there's if you want to worry about protecting your family from these types of risk, it certainly seems like Bitcoin is emerging more and more as the clear option to help one do that. I don't know what you think about the midterm. If you think these tariffs are going to help the dollar a little bit, or Trump has a huge real estate empire. He's going to want lower interest rates, and they want to keep devaluing the dollar anyway.
Yeah, so unleash the stable coins for lower interest rates. I'm not smart enough on tariffs and international trade. I do think it's interesting that crypto sold off this weekend, because zooming out, my long-term thesis on crypto in general, Bitcoin and beyond, is that I think of it as sort of like a put option on the existing world order. There's a certain political, financial, economic arrangement that's starting to break down, and it's going to take down a lot of different kinds of institutions with it. And crypto is very different. And I think it's possible there's some future state where, like, as trade wars ramp up, crypto prices go up, because once they get to the point where they have established themselves, or I guess I take for granted that we're still far from that point, that many otherwise very intelligent, serious people just dismiss them as some like weird tech speculative thing. But once we get over that hump, then I think something like a Bitcoin could actually very much become a risk-off asset, because you look at something like tariffs and trade wars, you say, well, that's bad for NVIDIA. That is bad for sovereign debt. For many countries, even the U.S., there's a point at which, if the trade war really spirals out of control, you could argue, well, that's bad for the dollar, that's bad for demand for U.S. treasuries. All these countries that were imposing tariffs on, one way they could rebel is try to just stop buying our debt, so forth and so on. And if the world reorients itself in that fashion, to me, it's bullish Bitcoin, because they're like, well, we're leaving that. We still need to do trade. So it might take many years to get there, but I think, like, in the long run, we could get there.
So I saw a tweet over the weekend that I thought was I'll try to find it so we can put it in the show notes, but the author was saying that what we've seen on the global scale in the last 2 weeks since Trump has been in office is the United States retreating from a unipolar world on its own terms. And so they're basically saying that it was inevitable that the unipolar world was going to be unsustainable for the United States. And so rather than trying to hold on to it as long as possible and collapsing and retreat, we're strategically retreating into a multipolar world. So if that's the case, can you have a multipolar world with a single global reserve currency?
That is a great framing. When you break it down to that, I would say no.
So what's the other currency then?
That's the thing. There might not be one. I think certainly Bitcoin can increasingly play a role, but I still think Bitcoin as being more of sort of like an insurance product as opposed to the thing you're going to use day to day. Like some of the other features a global reserve currency needs is a viable credit market. So one of the other reasons the dollar is the global reserve currency is that it is very easy to borrow in dollars at an affordable interest rate. And this is like, there's fascinating statistics that if you look at the other major currencies like the euro, pound, etc., even the Chinese yuan, there is very, very little international credit. But like lots of people, governments, countries, companies borrow money in dollars. So what replaces that? I don't know. And it's going to be very hard for Bitcoin to replace that. We have no credit market. In fact, there's a problem now with like ETF issuers in Bitcoin that they all complain that because the previous generation of lending facilitators, like the BlockFi's and Genesis of the world all blew up. That might be one reason Bitcoin didn't sell off as much. Also, there's not a lot of leverage in Bitcoin. There's more leverage in other coins possibly because they're integrated in DeFi more. So we might be going into a period where the dollar recedes as the global reserve currency, but there's not necessarily an alternative, a clear alternative that rises.
You don't see Bitcoin filling the gap of just some sort of, I mean, obviously the term is way overused, but the digital gold where if, it used to be gold before dollars. So if the dollar is receding in some way, shape, or form, you still need that sort of net neutral currency that at least, big players can settle around the world.
No, I do think that Bitcoin will very much benefit from this shift. If the question is, does and when does Bitcoin look like the dollar does today?
Mm-hmm.
Where you look at the dollar and say, okay, some like 58, 9, 60% of global foreign exchange reserves are in dollars. Some very high percentage of cross-border trade is invoiced and settled in dollars. Commodities are all priced in dollars. So much credit is in dollars. Could Bitcoin achieve that status someday in our lifetimes? Yes. But there's so much that needs to happen. And some of it you just can't make happen overnight. You can't make the things like the liquidity and the credit markets appear overnight. And we have to see how the overall system is stress tested by this level of adoption. So whether it's like, there are many questions I have that I don't have an answer to. Like in a world where governments increasingly adopt Bitcoin, do governments also start mining Bitcoin? And then do the governments who mine Bitcoin censor transactions from what they think are the other governments that they don't like? I don't know. The question of, the interesting thing about that world is the concerns that some very smart people have now about the potential economic security of Bitcoin due to the halvings, they might not apply. Because if governments are mining Bitcoin because Bitcoin is increasingly the way they settle cross-border activity, they'll mine at a loss. But if then it's mostly governments mining at a loss and the private miners have all blown up, what does that mean for how the network operates? I'm actually curious what you guys think, but I have no idea.
Same. Those are the more difficult questions, and I think specifically when we get to a point 3-4 halvings down the road. I mean, my projection is the Bitcoin could be the size of like the monetary base at that time. 30 trillion, something like that. But that's still, we're still talking 20, 30 years, and right. It's hard to call how the economics will be working at that point. It's difficult.
We barely had any transactions in the last couple of days worth of blocks anyway.
I saw that they're almost empty.
They're almost empty right now. And I did see the other day, like a week ago, Foundry mined 7 blocks in a row or something crazy.
Is that right?
Yeah, it was wild.
Did others go offline or something? Maybe they had technical issues.
Maybe, I don't know, but I mean, even if Antpool or whatever was offline, also those pools are distributed, so I think they just got very lucky.
Statistically, though, I mean, what percentage how much of the hash rate is Foundry?
It's like a third or something. I can look it up.
It's a lot. Okay. Yeah. 7's a lot still, even if you're a third.
Yeah, agreed.
It is.
I don't know. Not to find it.
This is great. I'm going to have to look this up, actually, because this is great fodder for discussion in the classroom when I'm teaching proof of work.
Yeah.
Yeah, I'll find it.
Yeah, over a third. You're right.
They're a third?
34%.
Yeah.
34, yeah. So
I mean, go America, better than other places having. And I think you mentioned this once to me, Alec, that if we want a pro Bitcoin administration, having things like being pro mining is actually just as important as, if not more than, a strategic reserve.
Yeah, I agree.
Well, Omid, we know we have to let you go. We'll have to continue this though, because I think there's a lot of open questions still. Only 2 weeks into the madness. of the new administration. So we're going to see how this plays out for us.
Yeah, thank you. And we didn't even talk about the Trump meme coin.
It feels like people forgot about it already.
Yeah, I saw it's going down.
Is it?
Still going down.
With everything else.
Still going down.
Unsurprisingly.
Still has like a FDV of over 20 billion, which on paper still accounts for the bulk of Trump's net worth and also my Ajita embarrassment.
I did see his World
Liberty.
World Liberty Network. They're buying ETH though.
Yeah.
Yeah, they're
With
on ETH.
OPM.
I do wonder if all of the Trump stuff, just final thought, whether it's World Liberty or his meme coin, is just his way to get other people to pay for his family to accumulate crypto assets. Because with World Liberty, they did an ICO. I still don't understand what the point of it is because it's just going to sit on top of Aave, but we already have Aave. But the money that came in for the ICO, they used it to buy ETH and DeFi tokens, DeFi governance tokens. I'm like, oh, isn't that clever? Like now they're long ETH and DeFi and they didn't have to spend any of their own money. And I could totally see how with whatever value is left in the meme coins that once the lockups expire, which will be in like 6 weeks, they'll just start selling the meme coin and buying SOL and SOL-based assets. And then at the end, they'll have like $1 billion worth of SOL-based assets that they didn't spend a penny on.
Well, they are great grifters, that's for sure.
That is for sure.
We'll see how it goes. All right, Omid.
Thank you.
Thanks a lot for having me, guys. Really enjoyed it.
Always a pleasure.
Appreciate it.
Until next time.
Take care.
Yeah.
All right.